Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. All right, premium members only. Let's take a look at gold futures. These are the February 2022 contracts. Okay, and the new session's already started right there, so you can ignore that. So we're looking at this candlestick right here, 11:30, November 30th. What do I think about gold? Well, continues to look super weak. It's below the 50-day moving average. And I think I mentioned yesterday that don't let this fool you that these are bottoming. Yeah, they could come up a little bit, but look at this. They've been riding along the 50, and clearly yesterday and today, well, they're well below the 50 now. Okay, and until the daily chart, for those that are more swing traders, okay, and not looking at the hourly, and you don't necessarily trade intraday stuff, then you want to wait to see if this does. Does it continue to go down? Does this candlestick right here, the new one, go down? Does it come up and touch it and get rejected? Okay, so it's below the 50. So just as a general rule, we would short below the 50. We'd look for opportunities to short while we're below the 50. Everybody get that? New members, welcome. Even members have been around for a while. Okay, let me redraw that 50 a little bit nicer. Okay, it's almost flat, right? We're below it, correct? This candlestick, especially the body, and this new candlestick that's just started now, because the new session has just started about a little less, not quite 3 hours ago. Okay, so since we're below the 50, we resist the temptation to trade long. Okay, and we favor trading short. Now, I know there's veteran traders and experienced traders that's fine. If you feel comfortable doing otherwise, by all means. I'm not a financial advisor. Do your thing. Okay, I'm just sharing my opinion with you, right? Because you all saw the disclaimer at the beginning of the video, right? Right. So my opinion is to keep it safe. All right. When you're below the 50, you look for opportunity to trade short. Okay, which would be if it comes up, touches it, and starts getting rejected. Okay. So that's the daily chart. The daily chart looks weak. Let's take a look at this cycle, this daily cycle. Let me back off just a little bit here and zoom out. What am I talking about? Well, these are daily cycles. Those that are not familiar with cycle analysis, perhaps some new members or those that just maybe haven't heard about these yet. Wherever these two green cycles come together, price low, price low, price low. See how the price comes down? Sometimes the price will stall like it did over here. But it still came down into it. See that? Huge. Came down to it huge. This one came down into huge. Down into it huge. This one came down a little bit. Okay, but still came down. So where are we at now? Okay, well this I think is going to be the middle of December. Right. So I've been saying for over a week now, anywhere from December 16th out to about Christmas. Watch out. Okay. And gold looks no different. A lot of the commodities and futures are showing the same thing. So it would not surprise me. Maybe it comes up a little bit and then gets rejected again. Okay, so that's the daily. Let's look at the monthly, and then we'll look at the shorter time frames. Okay. Monthly also looks like, oh my gosh, look at this. Like it's just got, look at that. That's got weakness written all over it. Nothing's changed in the monthly. It still looks very weak. Okay, on the monthly. Let's look at the weekly. Okay, clearly clearly this entire week so far, almost the entire candlestick, let me zoom in just a little bit, except for that upper wick, the entire body is below the 50 week. Okay, and it looks like there's plenty of room to go for this to continue to go down, even on the weekly chart. So just think about it. We've got weakness on the monthly, weakness on the weekly, weakness on the daily. Okay, so gold does not look strong. Let's go to the hourly. Let me just zoom out a little. Okay, trying to get a bounce indicator-wise. That's, excuse me, that's the hourly Okay? If it gets anywhere near that, it gets rejected. Take the short side trade. That's my opinion. Okay? And it may do that. We'll see we'll see if these do. Then again, it may not even get anywhere near that 50. It may just kind of come up in here. I'm trying to think. It may do one of these deals. See how that didn't get anywhere near it? Stayed way away from the 50. Big old buffer zone. Okay. So that's something like, ignore these green arcs here. That's just the daily stuff still sitting in here. Okay. So you're waiting to see what's it do on the hourly chart. Comes up and kind of gets rejected. Yeah, short it. Okay, let's look at the 5 minute. Let me kind of squeeze this and stretch it. Okay, maybe that's as good as I'm going to get. Okay, so where are we at here? Is this the new day? No, 7 o'clock. There we go. New day started right there. Okay. So new day started right there. Let me just zoom in a little bit. Hold on 1 second. Okay. So I'm looking for is another. Where? Okay, it's way over there. Let me see if I can get these to. There we go. So that was just 5 minute chart. So that's why I can only fit so much into it. So this is yesterday's. Okay, and look how the way at the 5 minute chart stayed. This is the 50 simple moving average on a 5 minute chart. Okay, so be aware of that. That just stayed there all through the night. Yesterday, or the session that just passed. Okay, look at that. Comes up, comes back down. Really not a whole lot going on there. A little bit of room there though. 1796, and the 50 was at 1790. That's not bad. 6 points. Okay, so just as an idea, as a trade right there, right? That's possible right there. All right, or even better. I'm sorry, even better is this. Okay, so let me zoom in a little bit so people can get a little better understanding. If I can find out where it went. Okay, my bad. I should have paid attention to the. Give me a second here, guys. Okay, what is that? That is 2310. Okay, 2310. Let's go look at that. All right, so 2310 is probably about right here. Okay. So that's tradable, or that one. You go long because you're on the 5 minute chart. You're above the 50 and it's pulling away. Okay, trade it. And you get 3, 6, about 8 more candlesticks, which is about 40 minutes. And you're getting, I don't know, let's see, 92, and it finishes as this one starts, because you're going to look at your indicators, right? So I'll talk about the indicators in a moment. It goes from 92 to about 97, 96, 97. Okay, that's about 4 or 5 points in gold. Yeah, you're definitely going to make some money there. Okay, and what are you looking at? Well, you're looking at this. What's this doing? Okay, and that candlestick right there starts seeing some weakness. Okay, get out of the trade. The low was 96, but you got it way over here at 92. So you got 4 points. Even if you waited for that entire 5 minute candlestick and it closed at 96, you still picked up 4 points. Okay? If you want to maximize some gains, yeah, you might have to take a little bit bigger risk and increase your position size, but that's 4 points worth of profit right there. So, that may not seem like a big deal, but it can be when you're watching paint dry along the 50 on the 5 minute chart, right? Okay. But now we get over here, okay? What's the deal here? This is obviously this is intraday as we come into intraday here. Okay. And you can see the MACD starts really swelling up. And what happens? It crosses over about right there. This one goes below the 50, and it's basically it's game on. Okay. Because clearly fast moving indicators like this one and the SMI, which is pretty fast itself, is already giving you a heads up. Let's see, by the time you got to this candlestick right here, it was already rolling over. Okay, but we're above the 50. So if you want to stick to some general rules, you wouldn't trade short above the 50. Okay, I'm not saying that you can't violate that rule, but so you'd be a little patient here. Wait for the MACD to confirm it right about at that candlestick. Let me clear the screen. That candlestick right there. As soon as that candlestick got going and you saw that the MACD, and especially when this candlestick got below the 50, and you see the MACD beginning to gap, yeah, you can trade that. You trade that candlestick right there, near its close. Okay? And then what? Well, you just took advantage of all this intraday stuff for the next hour and half, whatever that is, hour and 15 minutes, hour and a half, whatever that is. Look at that. From 1794 to approximately down to 70, okay? It's huge. 20 points, approximately. 20 points. And you saw this green candlestick and you panicked? No, of course you didn't panic. Why? Because the gap on the MACD is the Suez Canal. The Nile, the Mississippi River, take your pick, whatever your favorite big huge river is. You don't get out on a one little green candlestick with this going on. All right? I know these indicators are saying, oh, well, wait, time to get out. No, not necessarily. You could, though. You get out here when it crosses over down here. That's fine. You can get out on that. It's not going to kill you. You made a bunch of money here. It's okay. If you're nervous, kind of a nervous trader, just get out. And then as you mature as a trader, you'll figure out what continuation's all about, okay? And you'll get better at that. All right. That's it. Okay? That's it on gold. Talk to you all real soon again next time.